the vast majority of these coins will not go back to all-time highs, and they do not deserve to go back to all-time highs. And we're not talking about random scam meme coins. We're talking about stuff like Polkadot, Cardano. I mean, look.
I think a major trend going forward will either be no token or tokenized equity. Anything in between will be uninvestable.
Welcome back to The Roll-Up. I'm Robbie.
I'm Andy. Robbie and I met at the University of Florida in 2017, where we first found out about digital assets.
We learned a lot along the way, and we're bringing you face-to-face with the leaders of our industry.
Sit back, relax, and enjoy today's episode. Welcome to the show,
Nice to
man.
see you. Yeah, thanks for having me on.
I'm digging the haircut, man. It's a fresh fade. It's the holiday fade. Man, putting yourself out there on camera every day, as we know, it requires a certain level of self-care as well as self-belief. You know what I mean?
I think I went crazy a long time ago, to be honest. It's been over for a while.
Well, man, thanks for joining. Longtime listener of the show, man. Lark Davis in the house. We got a lot to talk about, and I was talking about that token versus equity dynamic. We got market dynamics. We've got institutional dynamics. I'd like to just give you a bit of context as to how I'm seeing things, and I'm super curious your opinion. So we've kind of started this contractionary phase within the crypto native ecosystem. So crypto native companies, protocols, projects, investors, speculators, we're kind of going through this like return to reality, this kind of trimming of the fat, this revenue, this return to fundamentals, this token holder equity dynamic, all these things. You know, what is your buyback schedule? What is the demand side for this thing? There's this very like contractionary, almost like coming to the senses of like this maturation phase within the crypto native space. So I kind of view it as like contractionary. Then in the institutional kind of realm, it's this massive expansionary regime. You've got just this absolutely diabolical desire for institutions to launch chains, launch stable coins, launch crypto products, come into the space, you know, treasury companies. And so you've got this like massive cognitive dissonance happening right now in the space, where on a 10-year time horizon, things have never looked better. But if you look at the best performing asset of this year, Hyperliquid, it's officially red on the year. And so this entire space is looking at, and I think we're all like looking around, either trying to figure out who to blame, what's going on, how to make sense of this. So Lark Davis, how do we make sense of this juxtaposition that we found?
We got a lot to cover there, and we'll just start off with this. It's been a weird year. Essentially, the majority of altcoins have been in a bear market for the entirety of the year. A lot of them sort of had their price performance back in December, January. Many of them didn't even come close to getting to previous all-time highs. Even quote-unquote good coins like Chainlink, for example, didn't even come close to getting back to previous highs. So we had a lot of disenchantment, and it was very interesting because it went from this financial nihilism, which was what typified the end of last year, where everything's bullshit and nothing has any value. And that was very much the meme coins, right? Meme coins are more honest about it. Yeah, they do nothing. It's just a picture of a cat or a goat or a dog or frog or whatever. Okay? Very honest. Means nothing. Most of it was scams. Everybody went into it knowing most of them were scams. Whereas you had on the other side, all of these layer 1 tokens, layer 2 tokens, governance tokens for DeFi protocols, which put on the theater of having some kind of value, but were more valueless than the meme coins. I mean, who's going to go and govern this random DeFi platform? Nobody cares. And the tricky part, as we've just seen with Axelar just sold to a bigger company. And so good for them. The equity holders just ate. Token holders, sorry, bad news. Nobody cares because you have zero rights as a token holder. And this has been a part of the big problem, which is why the revenue meta popped up this year, which, great. You have a token, there's doing buybacks. There's actually some kind of reason to hold the token to hope that it'll go up in the future because there's some kind of business model attached to it that's driving real value through buybacks or revenue shares or whatever it might be. So people have gone through a big cycle of emotions with coins over the last year. And of course, most of the altcoins have proven themselves to be virtually worthless. Maybe there's about 100 investable assets across the crypto space, quite a few speculatable assets, obviously. But we've come through this weird phase where throughout 2025, most of the altcoins have been slaughtered. Okay, that's obvious. Everybody knows, everybody's seen that. We've had a few weird areas of outperformance. We had Zcash go on its run, for example, Hyperliquid go on its run. A few others had some interesting moves throughout the year. Bitcoin hit a new all-time high. ETH hit a new all-time high, but barely. Bitcoin only by about 10K. ETH only by $100, and Solana didn't quite hit a new high in the rally this year. It came about $40 short. So that was some of the biggest price action. We've had a very disappointing year for crypto. Meanwhile, people who have been disenchanted with crypto and become overly cynical with crypto, they're not coming back to play in the casino as much as they used to. No, they will when we get some green candles, don't get me wrong, but they've gone to other places. They've seen data center stocks go up 10, 20, 30, 40, 50x, all kinds of AI stock plays. So when you actually buy a share in a company, even if it's a quantum computing company that's kind of BS and might go bankrupt in a few years, at least you're playing a better game than buying these literal scam tokens that are being launched in the market by VCs who only want to extract. And what happened to the days? Can I just say, what happened to the days, man, when you would have an ICO and it would come out at a 20, 30, 40, $50 million valuation? Everybody had a chance to eat, man. Now it's like, oh, $20 billion fully diluted valuation on day one. Everybody's screwed. No one's going to buy it. The only people who win are the VCs who funded the seed round at 10 million bucks. That's it.
I mean, and luckily we've actually seen some sort of return to this ICO idea. I mean, we saw Aztec this past week or two. We've seen, I think football.fun has theirs today. But still that like the core primitive of, you know, this equal opportunity playing field has been sort of taken away. How do you reason about the kind of idea of maybe some of these tokens may not go to all-time highs in the future, and perhaps they've seen their time in the sun? Again, kind of coming back to this like bifurcated outlook on the space, right? You've got, you know, you laid out the kind of lay of the land extremely well with regards to kind of how people are expecting the performance. Like for people who are holding different crypto assets, you know, is there a framework that you've been using this year as to like how you want to manage your portfolio given the state of the altcoin market? Like, have you changed your views on like your portfolio management this year?
Yeah, absolutely. I think you have to be forced to change in these kind of market conditions. One of the things for me is really just there's a few altcoins I'm still holding as spot positions. It's probably not a great idea, but I'm still doing that. You know, something like Bitcoin or Solana. Okay, fine. That's different. I don't mind the volatility. I can hold those. The other altcoins, anyway, you know, it's not a good time. But for the most part, really, what's been rewarded over the last year, it's been chasing the trends, whatever the hot coin of the week or the month is, where the hot money ball is going. You know, like Zcash. I faded when Naval Ravikant started shilling it. It was 80 bucks. Said, it's what this old dino coin. Who cares? Where the money's chasing. Doesn't matter what it does, right? So there's been a bit of that. You need to be very, very, very rotational right now. And here's the fact too. The vast majority of these coins will not go back to all-time highs, and they do not deserve to go back to all-time highs. And we're not talking about random scam meme coins. We're talking about stuff like Polkadot, Cardano. I mean, look, maybe at some point we get some crazy risk on season and Cardano for some reason goes to new all-time highs, but they don't deserve to. They're wildly overvalued at their current valuations. They have almost no users on chain. They have almost nobody using any products on their chain. There's almost no apps built on their chain. There's almost no stable coins built on their chain. There's almost no daily perpetual volumes, swap volumes, anything. They're ghost towns, absolute ghost towns. These things they're worth multi-billion-dollar valuations. So there's a bit of healing of nature that needs to come in here. Whereas other things like Solana probably feels relatively undervalued. Why is Solana worth 1/5 of Ethereum when it's beating on most metrics? So there's areas of opportunity within the mispricings of some of these assets. And there's also areas of it doesn't make any sense, and these coins really don't deserve to go back to new all-time highs. Maybe like Cardano does because it's kind of like a cult coin, but a lot of these coins probably won't, and they don't deserve to either. And there's a question that investors have to look at themselves in the mirror and say, be honest with your asset, man. What you're holding, does it actually deserve to go back to new all-time high? You just have bag bias because you're underwater and you're hoping and praying that it goes back up. Sometimes just cutting that dead weight and moving on with your life can be the best thing you can do.
YEET is built for big moments, the most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Yeah. Yeah, no, I totally hear you, and it has been a year of concentration being the strategy. I mean, ever since I entered in 2017, the market always moved together. And, I remember DGen Spartan in 2020 was like, guys, diversification in crypto is the silliest idea because the whole market moves together for the most part. And the winners are just, they always, if you can identify the winners, they outperform consistently. So why not just hold a lot of your assets in like, the tokens that you want to own that you actually believe in. And I think that has continued to prove true here this year. I'm curious how you keep an optimistic outlook on the market, right? So let's kind of flip towards this more institutional. I call it Wolf of Wall Street's esque tokenization bull run. I was in New York a couple weeks back for SmartCon with Chainlink. It was unreal. It was an absolute, it was wild. Now Bitcoin was still 105K, but it was pure mania mode, and it still is now to this day, and will still, it will still be. I'll spend a lot more time there next year, and so for a lot of us who are just in the kind of crypto sphere, we see the doom and gloom kind of CT, we see lack of performance from our favorite tokens. But what we don't see is what's actually happening behind the scenes in these offices, in these institutional spaces. Perhaps you can give us a bit more of the optimistic outlook here as to why you think that, or why you could be led to believe that this is the best time, to be in crypto for the long haul, given the adoption, or perhaps you don't feel that way.
I do feel that way, and it's been a very tough way to feel for some months now because we
Yeah.
diverged from stock markets 5-6 months ago at this point, where they kept running and crypto stalled out. Then we had 10-10, the big crash washed a lot of people out, and we have not recovered from that. We are still seeing the ghosts of that event in the market charts every single day. So there's that to deal with. Then at the same time, all this has been happening, and there's been such an extreme amount of pessimism and cynicism in the markets. We have had some of the biggest announcements possible from the market. We have Vanguard getting into crypto. A year ago, they said, never on our watch. They fired that CEO and said, get everybody into ETFs because BlackRock's making too much money here. We need to get our clients in on this. So we got Vanguard.
A little late there, guys.
Yeah, but better late than never. They're late, but they're not late, right?
Exactly.
Was that Tom Lee made a good point? There's only 4 million Bitcoin addresses, but there's 20 million people with IRA accounts or whatever.
Yeah.
$10,000. So it's interesting. So there's that. So we are early to adoption for the mainstream, for the TradFi money, right? It feels like we've gone a long way because we've seen so many big buyers come in. The ETFs absorbed so much, but it's going to keep happening over time. So we've had Vanguard, we've had Bank of America, we had Charles Schwab, we had Amundi over in Europe, which is one of their biggest asset managers. We've had all these really, really big stories. JP Morgan. Okay, now it's just these crazy, crazy stories that everybody's become totally numb to it.
I know, right? Anymore. It's like if this happened in 2022, 2021, we'd be like, what? We'd be freaking out. But it's like every week now. Every week there is like one of these, like today it was Visa stable coins on Solana.
Heads would actually explode back in like 2017 if you told anybody that BlackRock's going to launch an ETF and that Vanguard's going to come in and Fidelity's going to come in. People would be like, you're an idiot, get out of here. It's never going to happen. Whereas here we are with these things happening. And to an extent, we've become numb to the good news. And that's very much a sign of bearish market conditions, that all this good news and nobody cares. Prices just keep going down. People keep having a lack of faith. So look, we are going through a reckoning right now. It's been if this was the top, if 126K was the top, it's one of the weirdest tops ever for Bitcoin because it was the quietest top. I remember the day that we were at 126, I said, this is a really weird top for Bitcoin, or really weird new price high because the timeline's dead. I guess nobody owns Bitcoin anymore. Nobody cares. Like nobody's celebrating the fact that Bitcoin's at 126K. Like normally you'd see, all kinds of posts and stuff. Now, obviously there's a few people posting, but it was very, very quiet because there was no altcoin season. People were not broadly making money. Most people were basically screwed. So you had Bitcoin top barely, no altcoin season, where we're also now heading into this weird situation where there's been no business cycle breakout because the US PMI manufacturing index has not broken out over 50 and sustained. We had 2 months where it was above 50, just barely back in January and February, and then it fell back under 50. So there's been no breakout in the business cycle. Normally it takes about a year for the business cycle to actually reach its peak. Hasn't happened. Okay. So it's been a very weird cycle so far. Normally Bitcoin tops with the business cycle, whereas this time Bitcoin topped without the business cycle. if we topped and that's truly the peak of peaks and we go down to 40, 50K by October next year, which is really not even that far away, guys, in the grand scheme of things.
But that's what Ben Cohen's calling for.
A lot of people, technicals would say, this is the thing. If you believe in the 4-year cycle, it's simply all that has to happen is for 524 or 530 days need to pass after the Bitcoin halving. That just simply marks the top every time. Ignore the fact that it always topped with the business cycle. Ignore the top that it topped with the credit cycles. None of that stuff matters apparently. Ignore the fact that in 2021, when Bitcoin topped, it partially topped because the Fed started talking about a tightening cycle and rate hikes and all this stuff. None of that stuff matters because 524 days passed from the day of the Bitcoin halving. Therefore, it's all over and buy Bitcoin at 40K in a year.
So I'm getting the vibe that you're not a believer in the 4-year cycle this time around. So, this is another interesting kind of like, I keep using the word juxtaposition where it's like technicals are saying rounded top, DATS, ran out of steam, markets topped on apathy, tough time. Fundamentals and liquidity flows are suggesting rate cuts coming, QE starting, business cycle kind of hasn't even really started in this regime. You could make an argument that 2026 is going to be the most stimulative monetary policy year since 2021, just basically off the last 5 years of kind of a restrictive policy. But yet here we are, and it sure looks like this time is not different.
No, that's the crazy thing. But ironically, to argue that this time is not different is to argue that this time is different. That's the tricky part about it.
Explain.
Because the things we just talked about. If you're arguing that this time is not different, well, it's different because normally Bitcoin tops of the business cycle. Again, we're just making a basic argument that 524 days have passed since Bitcoin halving, therefore it must top. Okay, and look, had 1010 not happened, we'd probably be in a very different place. The market makers have been aggressively just wrecking the market every second that they get because they probably lost tens of billions on that day. I can only imagine. So we have to deal with that. But there's a lot of reasons why you'd say, okay, well, this time is different because we didn't hit any of the top signals for Bitcoin. None of there's like 30 on-chain indicators. Not a single one of them got hit as a topping signal. Okay. So this time's different, except that 524 days passed, right? So then you have, of course, we've lost the 50-week, we've lost the 200-day, the monthly MACDs trending down. Like these are all bad things on the technicals. And this is all screaming that we are currently in a bear market. The question is, what kind of bear market is it? And that may be the thing that actually tricks people. That may be where we find out. Because this is the thing, everyone's expecting it's going to be a year-long bear market.
I don't think it's going to be. I think if this bull market was so different, you have to assume that the bear market is also going to be different.
It would really mess a lot of people up if we had a 3 or 4 month bear market. We didn't go much lower than like 75K, for example, or something like that. It remains to be seen exactly how it's going to play out. If you just go with the traditional way of, okay, a 4-year cycle, X% drawdown afterwards, nothing else really matters, then yeah, we're probably going to see Bitcoin bottom October next year at 40 to 50K, somewhere around the 200 week, which is around 55K right now, maybe dip a little bit under. And that's basically it. Some simple process, and then we try to run the 4-year cycle next time, and next time it doesn't work out. But here's the thing, is that the 4-year cycle is a very interesting narrative, but the 4-year cycle has been primarily driven by the liquidity flows, right? And so right now, to argue that the 4-year cycle should simply stay in play because it's always been in play, you're essentially arguing that you're fighting the Fed. Again, we want to talk about this time is different. What's the grand rule in investing? Don't fight the Fed. Yeah. Everybody's saying, no, I want to fight the Fed. They just ended QT and 10 days later instantly capitulated and started. It's not quantitative easing. It's reserve management. It's not QE, guys. It's reserve management. Okay, we're not going to use the 2 letters. But they're buying back $40 billion of treasury bills a month. And the estimates from the big banks are that they're going to buy up to $500 billion of T-bills next year. That's a massive stimulus. Massive. That's an environment where Bitcoin tends to thrive. Plus, you got a new Fed chair coming in. Trump's litmus test is, will you put rates down to 1%? Yes or no? Basically. Yeah. So you're fighting the Fed. This is the thing. It's a very interesting place to be.
There's a bit of there's a bit of patience required here, right? I think, that the Fed chair is probably going to be elected, in the next 60 days or so, 30 to 60 days. That should be a nice boost for the market's sentiment, but that won't actually take effect till May. Then the actual effects of the QE and the rates, they probably won't really kick in till middle to end of next year. I don't know. It's going to be very interesting to kind of watch play out. I think we can speculate as we want. I think that the important thing is to make sure that for those listening, you've got your tax capital allocated for this year. You're nice and cozy, and you can weather whatever storm or good times are ahead. So, Lark, kind of shifting off of the market, speculation and just kind of like where we're looking. I'd like to get your take on this token versus equity dynamic here. So, you mentioned Axelar. Right. So let's just start with them as this example here, but just this broad problem. And I'll give some context in the tweet, which is basically or a tweet that I saw. He's like, Grant from Blockmate said, I think a major trend going forward will either be no token or tokenized equity. Anything in between will be uninvestable. And so for those watching, basically we had this regime with the SEC where you had to create a foundation and a labs company. The foundation was usually in the Cayman Islands, and the labs was kind of wherever, either in Switzerland, in the US, Singapore. And basically the labs was the development company for the foundation typically. And so, yeah, I mean, I'm just curious your take on how you see these companies playing out in the future, how you kind of think about this transition. Because again, it feels like the gig is up on the token plus equity dynamic. How do you think this changes over the next couple of years now that we're in a better regulatory regime?
I think the market's told us quite clearly. The market's sick of it. They don't want to buy these overly inflated, useless governance tokens for VCs anymore. Back in 2021, you could throw money at basically anything, it would probably go up. Okay, especially hot new coins hitting the market. Now, it's just not been the case. The market's smartened up a bit to that reality. And therefore, people are not one to take these useless tokens anymore. Well, it's a utility token, a governance token. Yeah, why don't I get some actual stake in this? Which is, of course, why the revenue meta has taken off with, Pump Fund and Hyperliquid and all this kind of stuff. I know, what a crazy idea, right? Companies that actually make money.
I need to get some. Revenue meta hats. I think they're
perfect.
Coming. I think they're coming.
Yes.
So,
but I understand the frustration from investors. That's I've been in a lot of those deals and they've sucked.
I mean, our fund angel portfolio is looking really rough, to be honest. I think that goes for a lot of people. So the market is tired of this. Hyperliquid also helped to really push this forward, where it was like, all right, guys, we're going to do things this way. We're going to be buying back with 99% of our profits, and you guys can figure the rest out. Obviously, they were highly rewarded this year. So what does this look like going forward then? Let's say, so Axelar obviously got acquired by Circle, leaving, I think, to be the token holders in the dust completely.
Completely.
So how are app tokens even investable then? Because if you can just sell the equity and get bought out, and the equity holders own the equity, which is likely the founders and any of the investors who did a safe plus a token warrant, what is the incentive to buy app tokens?
Very thin. It's a very thin incentive. This is the thing. You have to, maybe you take someone like Aave, for example. I would be very, very surprised if Aave sold out and left the token holders in the dust, right? So then you got to trust somebody, right? You don't have any sort of legal representation in terms of a token holder. So the only way forward really is to have better ICOs, where when you buy a token, it gives you some kind of digital rights to the company as a shareholder. That's probably the only way it's going to make sense. And until we start getting more of that, a lot of altcoins are uninvestable. That's why I said there's maybe 100 investable assets in crypto right now, and the 100 number might be generous.
Yeah. I mean, this dynamic, it's hard to overstate how much Fugazi, Gary Gensler's regime forced on this space. So maybe we can flip that on its head. I just saw SEC Chair Paul Atkins will be speaking at Digital Asset Summit in New York City this upcoming year. He's gone on and said that they're going to bring all markets on chain in the next 2 years. Larry Fink is saying tokenize everything. So it remains more and more clear that the big investable category right now is this tokenization RWA category. The issue here, though, Lark, is people like you and myself, we don't necessarily have access to these deals. We don't have access to the Tempo deal. I mean, we don't have access to the, whatever it is, Circle's ARC deal, or we don't have access to some of these. Like, I guess what I'm getting at is if I asked you how to get exposure to stable coins, you could say Ethereum, Plasma, Stable, Circle Stock. And there's a couple others, but like this is a mega trend, and
Yeah.
people in our community are kind of PO'd because they're like, well, how do we even get access to this? This is clearly the dominant investable narrative of the entire sector.
Mhm.
Payments, stables, tokenization, but how do we even invest in this?
That's the problem. You can't, outside of the few options you listed. And okay, investing in Ethereum or Solana because of stablecoin adoption, that's just like one of the many reasons why you may invest in those assets, right? Circle stock, I mean, it was felt kind of overvalued when they came out, and with interest rates going down, I'm not sure that's a great buy. And so that's it. You're left with a few protocols. Athena's got absolutely whacked since the 1010 crash.
Yeah.
So you're left with very few options. And the problem is, what you just shared about Larry Fink and Paul Atkins. Oh my gosh, RWA is so incredibly bullish. We're going to have trillions of dollars on chain, and I'm going to be able to like take a mortgage on, take my house mortgage and put it in Aave and earn stable coins and all this stuff. But you know what? There's no great way to invest in that. Sorry. Oh, I'm going to buy Ondo Finance. It's a governance token. It's a governance token. You don't capture any upside. You don't have any legal rights to the company or anything. That's a freaking governance token, man. Ondo, super bullish protocol, doing all the amazing stuff. You as a token holder, sorry.
Yeah, man. Man, so I know that you were, somewhat active in the AI crypto kind of trend that happened at the end of last year. I thought that was going to come back a bit, like, a yearly kind of cyclical thing where we would see it kind of pop up again. Completely has not. Yeah. No, I mean, Near is doing a great job of capitalizing there, and a couple others, but price action and just general flows or interest in the AI crypto construct is pretty much at all-time lows.
Yeah. Basically, look, but that's basically everything. I mean, we've had, again, a few things like perpetual swap dexes that had their little moment in the sun this year, but
even that, Lark, we've seen these for freaking 5 years. We saw GMX, DYDX. Like, it's like
nothing new under the sun. When people come out and say like, oh, we're doing InfoFi or SocialFi or prediction markets, we were doing prediction markets back in 2017, guys. Come on, it's nothing new.
But again, like this sentiment, I try not to get pigeonholed into this sentiment because I know I'm going to spend a lot of time in New York next year, and I know it's going to be a massive, it's just this expansionary regime. It's just that same issue of like, all right, well then how do you benefit from, BN or BKNY or whatever it is, getting a $2 billion offer from Circle or Stripe or whatever it was? Like, well, you don't. It's like, it's this really weird dynamic right now, and it's causing a lot of apathy. It's causing a lot of apathy.
Because you're better off buying of stocks and data centers and AI and space companies and biotech and stuff right now, because you actually have real shares of a company. Until we make the token model better and we see broader access get rolled out to regular investors, which is going to come. I think Coinbase and others are working on those very things. I think we'll see more regular investors get a chance to get a seat at the table, which will be a good thing. But for a lot of this stuff, it's not going to be the case. And for a lot of the best ideas happening in crypto right now, we have to accept we invited Wall Street in. Well, they invited themselves, but they still came. And now they brought all their tricks with them. And that's part of the process here, is that they're going to be doing these things. They're going to be making their own little things, making their own little deals. And no one's really going to be invited except for, Naval Ravikant and his buddies, and that's the San Francisco money crowd. And they're always invited to everything. So it's not really different than things usually play out.
Trade on anything: economics, weather, sports, crypto, and more. All on Kalshi.com 24/7 for the world's biggest prediction market.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? infiniFi gives you just that. Deposit stablecoins and earn far more than the current savings rate. infiniFi is a battle-tested, reliable DeFi platform that is ready to go. Head to infinifi.xyz. Lark, then I guess to kind of put this into the perspective that I've been thinking about it is, I've kind of structured in my mind, like there's this 10-year Silicon Valley outlook towards their investments, right? They go into these deals and they're like, these are exponential type of deals. And Hasib put this whole thing about exponential investing. And I think if you're a crypto bull, you have to adopt this mindset at the current phase where it's like, look, guys, these are exponential technologies. We're in decade 1.5 of the biggest crypto asset. We're in decade 1 of Ethereum. Guys, still, if we're in this for the next 2 to 3 decades, then, you know, that's kind of the 10-year, 20-year vision that you have to have with some of these kind of like liquid venture bets. But at the same time, you've got to be extremely, extremely, extremely kind of paranoid and pragmatic about like what it is that you're holding, and like very, very understanding of what it is you're buying and holding on to. So I guess like the way that I've taken these two outlooks that we've kind of built the context off of for this conversation and applied it to the investing side is like, all right, here's stuff that I want to just take a 10 to 20 year bet on and look back. And I don't want to be like, I sold Amazon in 2002, you know, and I don't want to be like, I sold Tesla, you know, in 2011. But at the same time, I also don't want to be the guy holding Enron and the guy holding, you know, MySpace. And so it's like, it's kind of this apples to apples with some of the early tech companies that I've been thinking about this. And I think it would help a lot of people to take a 10-year view on their really strong convicted crypto asset bets. However, being very paranoid, pragmatic, and being willing to adapt their theses along the way.
It's a good idea. The problem is that there's very few assets you could realistically consider holding for more than a year in crypto, maybe more than a few months in crypto. And that's just the harsh reality of it. I mean, the AI agent thing, great idea. All these AI agent things, even virtuals, great idea, great platform, token slaughtered. Will it do well in 10 years? May not be here in a year. Hard to say.
Yeah.
Whereas you could look at, okay, Bitcoin, Ethereum, Solana, okay, 10-year bets, sure. Apps, Aave, Sky, they're probably going to go the distance. Chainlink, probably going to go the distance. We start running out of names real quick, though, to be honest. And that's the problem. If you're going to go out and buy Monad, for example, gosh, so much hype, Monad came out, boom, instantly down, launched at a terrible time, a whole bunch of reasons why things will do what they do, but did we really need another layer 1? I mean, really? It's 2025. Your idea is to launch a layer 1 blockchain? We already have like 900 of them, and only 4 or 5 of them have any users. So is Monad going to be the next Amazon? Is that the one that we hold on to for 10 years? I have my doubts, right?
Yeah. But you do agree that there is a next Amazon that is in front of your face, and that you have to be able to, like, the winners will be the ones who are able to hold out.
Absolutely. Yeah. I think the name of that's Solana, by the way.
Really? That's your that's your Amazon bet.
Potentially. I feel like that's one you could hold for years. Although that being said, if we do get some kind of big season in 2026 and it goes to like $500, $600, take the profits, rebuy it in the next bear market.
Yeah. Last thing for you. Do you think so XRP has kind of been like this massive polarizing asset, let's say, for various reasons. Seems like this year they've really capitalized on this whole you know, let's just say like crypto legislation, political environment, etc. Chart looks pretty rough. I don't know what's going on over there. What's your take on XRP? Do you think XRP is going to survive for the next 5 to 10 years?
Probably. Look, I've never been the world's biggest XRP fan, but I'm also not anti-XRP. People like freak out. Oh my God, you don't own XRP, but don't you know about all? Like, yeah, I know. You guys tell me all the time. I've looked into it. We'll trade XRP when the chart looks good. It's fine, man. Now, look, XRP is a very interesting one. Will it be here in 10 years? Probably. Does it deserve its current valuation of some mind-boggling number? What's the current market cap? Let's have a quick look here. Current market cap is $116 billion. No, I don't think it deserved its $170, $180 billion market capitalization either. Now, RLUSD is gaining traction. It's got about $1.3 billion market cap for their stablecoins, so that's not bad, right? And there are RWAs coming on chain and stuff like that. But I think the market is pricing in some unbelievable future for XRP. Now, again, not anti-XRP. When I learned about XRP back in 2017, I said, that's a cool idea. Now it's like, but why wouldn't I just use Solana to send USDC for a fraction of a penny? What do I need XRP? But the banking partnerships, man, don't you have the banking partnerships? Yeah, okay, but they're stable coin. Yeah, we have a whole bunch of other stable coins too, man. What do we need our USD for? Like, its value proposition in 2025 is just not what it used to be, and you got to be honest about that. That's why, like, I'll trade it, man. I'll date it, but I ain't gonna marry XRP.
What about the XRP Chainlink rivalry? How do you feel about that one? That'll get the people going. I think Chainlink's gonna mog them over the next 10 years. I think Chainlink dominates, but I don't think the XRP army is gonna feel too fondly about that. What's your take on this? On who really owns the Swift banking partnerships? Who really owns?
Apparently, Linea. I don't know if you saw that. Apparently, they got a big Swift partnership as well. But anyway, I think Chainlink is an infinitely better asset than XRP. Okay, guys, come on. Just relax. Relax, okay? I don't own a Chainlink currently, but I think it's an infinitely better asset. Their CCIP technology is incredibly persuasive. They've got the great partnerships and all that kind of stuff. But more importantly, XRP is very much a silo, right? They've got everything going on in their XRP silo, and it's really not that much going on if you look at the daily user metrics and stuff like that. But okay, sure, they've been around for 10 years and still don't really have that great of a user base, but they got a lot of holders and people are really excited about the vision that Brad and Chris, push out to the world all the time. So I get it. I understand why people invest in XRP. Again, it's not a very persuasive asset for me, but I understand the reason why people do. And if they pull it off, if Chris and Brad really pull it off and make everything magical happen with XRP, man, it's going to go to, I don't know, $10 or something at some point. But anyway, but Chainlink, I know. But Chainlink, though, gosh darn it, it is one of the most fundamentally important protocols in the entirety of the cryptocurrency industry. Okay. Yeah. And that's a very, very different value proposition. It's everywhere. It connects to every silo, essentially. And it has the infrastructure to make all the silos talk to each other and bring assets, move corn from silo to silo. It's a pretty amazing piece of technology. And now they finally started doing buybacks and stuff like that. So now there's finally, after years and years, some kind of reason to own it finally. So I think Sergey is very much aligned with the things you like in crypto, the decentralization, the good tech and all that kind of stuff. I think he's the right kind of founder with the right kind of vision. Whereas I feel like Chris and Brad have really they've made so much money selling XRP. They made so much money. It's crazy. They're both billionaires just from dumping XRP continuing in the market.
Weekly dump, just a monthly weekly dump is insane.
Man.
Yeah, man. Lark Davis, man. What's the rest of your week look like here? You got a busy one?
Just grinding out some videos before we get to the holiday season. Basically, gonna try and take a good week or so off. I might sneak in the occasional live stream. Something exciting is happening, but try to take off a little bit of time over the holidays. But still, grind out some videos, get some stuff pre-recorded. Got some juicy ones coming, like the Bitcoin Epstein connections. That's gonna be fun. Where can our audience find you, Lark? Just come over to X, look for Lark Davis. I'm there. You'll find me. We're always sharing charts, talking about stuff, having a good time. So I'd love to see you there. All right, man. Thanks for joining today. It's been a fun start to the stream. Appreciate your time and your content and just general contributions to the space, man. We'll see where we end up. We will see where we end up. Talk to you in 3 to 6 months, hopefully. Peace, buddy.